Real estate investors are slowing down their purchasing. Is this a good thing? We're going to talk about it on Today in Mortgages. Hey, what's up, everybody? Welcome back to the show where we are talking about what's real, what's hype, what you should be actually paying attention to and talking to with your borrowers and buyers out there in real estate and mortgage news today. And today we're talking about an article that I found in Business Insider that's talking about real estate investors slowing down their purchasing. So, Rich, we're going to jump straight into it. Tell us the general gist of what's happening in the marketplace with real estate investors right now.
Well, imagine, 2 years ago, you're an investor, you got some cash, you're seeing rents climbing like crazy, you're seeing appreciation happening, you're seeing low interest rates. It was prime for investors to jump into real estate because obviously they'll see a ton of equity, they'll see rent, they'll see great return on investment in terms of rent per month, and that's slowing right now. So you're starting to see that with investors pulling out.
Yeah, definitely. So the stat I have here, the quote from the article is home purchases by real estate investors fell 48.6% in the first quarter from a year ago, the largest annual decline since Redfin began tracking records in 2000. So we got 23 years of data here, and this is the biggest decline. That is significant. And anecdotally, I know a lot of people who got into real estate over the past couple of years because of what you just said. Interest rates were so low. For a brief period of time, we had a dip in home prices at the very beginning of the pandemic. And there was a lot of potential extra cash flowing around for people to go and try to get into, flip houses or rent houses or whatever it might be. And that's really slowed down a lot. So, we talked about this, but what are some of the other reasons that this slowdown is happening?
Well, rents are leveling out. They're not continuing to climb. Right now, we're looking at moderate appreciation, very, low compared to what we had seen. And a lot of these investors are sitting on good investments. They may not be returning the profit that they like in terms of rent, but they've got appreciation. This is time for them to realize that appreciation and likely sell, which is great for a lot of home buyers right now. But I don't want this. The numbers are way down. But the numbers are way down across the board for all, whether primary investor, second home, they're way down. And it's because there's no inventory. So if these these fix and flippers and these investors can't buy property because there's nothing listed, then obviously the numbers are coming down. So that's one of the main reasons. The other reason is, like I said, rents are leveling off. So they're not receiving the kind of profit they were prior. But also there's outside things look at what's happening with real estate taxes, right? They're being reassessed because of all the appreciation. And for an investor, that's a fixed expense that you can't pass on. Likely you can, but not if you have to charge $2,500 for rent in a market that's getting $2,200. So there's no way for them to make that up. So that's another monthly expense that's increased for an investor that they're probably saying, hey, maybe let's sell it. And at a good price, because right now you can sell anything because there's nothing listed, and they'll get a good price, they'll realize their return and move on to their next venture.
Yeah, that's a good point. I think that's a good thing that's happening in the market right now. Some of these investors might be selling those properties to get that return, which is going to bring a little bit more inventory online. My initial thought was that, it's keeping investors from taking the inventory that does exist. And so maybe there's a double whammy there.
Sure.
But like you said, we still have an inventory problem and it's still going to continue to be a problem. So Rich, what are maybe some things that I'm not thinking about that people should be thinking about of how this is good for home buyers?
Well, when you're not competing against an investor on your offer, that's a good thing. That means you're competing against other maybe first-time home buyers that are buying their starter home instead of investors coming in paying cash, because obviously sellers are motivated to take cash offers as opposed to finance offers. So, maybe you wiped out that competition and you've got a better chance of winning your offer.
Yeah, most definitely. And if you're a primary home buyer, if you're buying your primary home, you don't really have to worry about your profit margins on this. And so you've got an edge up on these real estate investors who are trying to, buy low, sell high, or buy low, do a quick renovation and rent high. So hopefully this is a good news for home buyers out there. Hopefully we can get more people in homes that are trying to get in homes, because there's so many first-time home buyers out there right now who are just struggling to find the right place. So Rich, before we rate this article, I'm going to take a quick break and remind everybody that we have this really great free resource out there that you can check out. It's 5 free, quick, easy ways that you can win at marketing to level up what you're doing to market yourself to your buyers and borrowers. Right now, you can go out and take action on that today, and you can get that free resource at todayinmortgages.com/marketing. So, Rich, real quick, let's rate this article. How are you going to rate this from 1 to 5?
Yeah, I'm going to give it a 3.
Okay, why?
Well, it's a little misleading. I hate all these new articles that are written when they're comparing year over year, and you can't really compare things to a manufactured event during COVID. So while these numbers are big percentages, they're not. It is, yes, investors are not in every single transaction like they were before, but it's a little misleading when the percentages are so huge. It's just huge because they're comparing it to a high point. And so I give it a 3. It's legit. I'd love to see investors out of it for a while. Give primary home buyers a chance to win deals. That's what I want to see.
That's right. Yeah, we definitely we want to do whatever loans are out there for whatever customers. But we love primary home buyers. We both first-time home buyers. We want to get more people into homes and having that American dream. So, Rich, thanks you so much for joining us today. Again, everybody out there, thank you for watching. If you really like this content, you can like, subscribe, and share it. And if you really like, and if you're interested in getting more analysis like this every day, and you want to know more about the network that we're a part of, you can click the Grow link below and check out how to become a part of the best network in mortgages. Thanks again for watching, everybody. Until next time, we'll see you on Today in Mortgages. Today in Mortgages is produced by Network Funding LP, which is an equal housing lender, NMLS 2297. The content of this program is meant to be a commentary on mortgage and real estate news, and any discussion of rates and or products should not be taken as an individual mortgage or home buying advice or pricing estimates. And any commentary on this show should not be considered a promise to make a loan. All applicants for a loan must qualify, and you should consult a professional regarding your individual loan scenarios for your financial situation. Visit our website at nflp.com/licenses for all state licensing and other legal information.